Listen-only mode.
Good morning and welcome to this fortnightly market outlook webinar. I'm Devarsh and I'm joined by my two colleagues, Vinay and Ajit. Good morning, Vinay.
Yeah, good morning, Devarsh, and hello everyone. Welcome to this fortnightly webinar.
How are you, Ajit?
I'm fine, sir. Thank you. And good morning, everyone. Welcome to this fortnightly webinar.
Okay. So the flow of the presentation will be like this. First, I'll discuss about the international market events. Then I will hand it over to Vinay. He will share his views from the technicals. After that, Ajit will come in and Ajit will share his views from the derivatives perspective. And in the end, I'll come again and try to summarize what we have shared. In the end, we will keep some minutes for question and answer. We'll try to answer as many questions as possible, time permitting, but make sure that the questions are related to any global or local economic events or sector specific. We will not be able to individually answer your stock specific query. If you have any question about our open recommendations, you are free to ask about our research recommendations. So let's straight away jump into the content of this webinar. So August US markets had a correction, which we were already predicting and we had alerted. The signs are that the economy in US is now uh, showing signs of a slowdown. So if you see, the bad news for the economy was considered good news for the stock prices, and stocks started rising from the last couple of sessions because the economic news were negative, and that means that the Federal Reserve would like to take this data as a supportive for keeping the interest rates on a pause, and if interest rates remain on a pause, that is considered good for the market rather than the rising interest rates. What happened in the US? First, the job opening data that came to 3.38 lakh, that fell, and that is the lowest since March 2000. This is not 200, this is 2000. The unemployment rate hit a 17-month high. Unemployment rate climbed from 3.5 to 3.8, and it is the highest since February of 2022. So 17-month high unemployment. That means the treasury yield, which have been rising, now should not rise, and that is shown in this chart. This is the chart which shows from COVID. The job openings went through the roof. There were huge jobs which were open and people were quitting. Almost 3% of the workforce, they were getting money in their bank account, around $1,200 per person per family, 2,400 or even 3,600, $4,800 they were getting. So they were not doing jobs, they were quitting. Now again, job quit rates have come down. People are coming back to the jobs, and jobs opening are also falling. Currently, we are at here at 5.5% in the US Fed rates. Now the expectation is that because inflation has come down and employment data is weak, the interest rate will remain steady till March of 2024 for next 6 meetings, 5 meetings. Interest rate will remain at 5.5. By that time, economy will slow down. Economy will be so bad that they will be forced to reduce the rates. So in May of 2024 and June of 24, interest rates are likely to start falling. So this is the current forecast based on the US Fed futures CME interest rate prediction tool. Now, what is important to learn is that stock market is a forward-looking instrument. Stock market collectively try to predict the future. Now, if this is the future, and if by March 24, US is going to go into recession, then usually between 3 to 6 months before that, stock market will start pricing that in. And that means that maybe from November or December, they will start predicting that US is going to go into the recession. It may be even as high as September also. So if that is true, and if US is going to go into recession in March, most of the people will start liquidating their positions from August to December. That means we are at the peak end or a fag end of US market rally if this prediction is true. So we have to keep this in mind that US market may go into recession into March of 24. Now let's come back to our markets, stock markets, and how markets around the world, Indian market have performed. So as we have been telling, the global markets and Indian markets were in some kind of a correction, not a sharp correction, but broadly large indices are down by 1 to 2%. But as usual, the Indian mid cap and small cap have had a huge outperformance. 4.5% gain for mid cap for last 1 month, 5% rise in a month in a small cap index. And mind you, when index is up 5%, that means many stocks are up 10 to 15%. Also, there are stocks which are down 10 to 15, and the average is 5% higher. What has happened over the last fortnight? Same, this trend is accentuated. The global markets have started recovering, as you can see on the upper portion of this table. Indian markets are also not falling, they are steady, but the saga of mid cap and small cap outperforming is also going on. So same as last 1 month, even the last fortnight, they are up 4 to 6%. What are the sectors which are helping the markets to rally? Metals and realty have come back strongly in the last fortnight. Power, PSU, consumer durable, all are been positive. Only FMCG has been a laggard. Healthcare, oil, gas are flat. They have not majorly negative, but they are flat. Over the last 1 month, FMCG, banking, oil and gas are up down by 2 to 3%. So what this suggests is that they were falling. Now they have stabilized. So last fortnight they are steady. Before that they fell 2.5%, and now they are trying to bottom out. So all this suggests that the Indian markets breadth is good. We are outperforming. Indian mid cap and small cap are outperforming, and that's where we have been bringing out many fundamental and technical trading ideas to you. Now that has been the last fortnight outlook. What is the outlook for the next fortnight? Let me invite my colleague Vinay to share views from the technical perspective. Over to you, Vinay.
Yeah, thank you, Devarsh bhai. One minute. Yeah, so good morning, friends. Now I will take you through the how Indian markets and sectoral indices as well as the global market indices, and I will also go through the intermarket analysis and how they are shaping up and how they are giving us the sign that what would be the direction of the markets in the coming fortnights. So let us directly jump to the slides. Now let us talk about the Nifty first. So basically this is a Nifty daily chart on the shorter time frame. We can see over here it is into a choppy trend. It is not not showing any direction. So it has been going up and coming down, going up and coming down. So clear cut direction was missing, momentum was missing in the Nifty, while small caps and mid caps were continuously doing good. So as we can see over here, it is a falling wedge pattern on the daily chart. So once we see breakout about this pattern, the falling wedge pattern, we will see some momentum coming back into the Nifty. So the level which we are looking at is at this point of time is 19,500. Once this 19,500 is taken out, we can expect a short covering in Nifty. And on the lower side, this is the multiple bottoms around 19,250 to 19,300. So it has become a strong base and it should be kept as a stop loss and trading long position. So though Nifty has not performed that much and fallen by 700 points from the all-time high, but breadth of the market is quite strong and it has not broken down also. So gradually correction was there, but signs are there that the chances of breakout is higher because this is a RSI on the daily chart which has given a positive crossover. So this is indicating that there are good chances that price will also break out. So we are waiting for 19,500 to take to be taken out on the upside, and 19,250 will remain as a stop loss for the traders. Now let us look at the Nifty on weekly charts, some positional perspective. So basically this is a high which was formed in 2021. This is October 2021 top, where 18,400 odd level was the top. After that in December 2022 we saw that Nifty made an all-time high at 18,887, and after that this was broken out. So this was broken out in 2023. So this is a running correction which we have seen from the all-time high. 19,999 was the all-time high, and for last 5 weeks Nifty has been falling. So it has been forming into the flag kind of pattern, retracement of the overall uptrend. So this is a trend line adjoining the previous top, which gives the strong support in the zone of 19,050 to 19,100. So this will remain as a stop loss for the positional traders until we unless and until we breach this level on in the Nifty. The hopes will be there that this trend will be continue, and the overall market will remain bullish for the coming time. So 19,050 to 19,100 is a strong support for the Nifty. Now let us talk about the Bank Nifty. So Bank Nifty is also into a choppy trend, not giving any directional movement. Choppiness is there, momentum is missing. On the upside, we can see for last 3 weeks, this is the weekly Bank Nifty chart, and here we can see for last 3 weeks, Bank Nifty has been consolidating within a 1,000-point range. So on the upside, 45,000 is a strong resistance. I'm talking about the spot Bank Nifty. So once this 45,000 is taken out, we can expect some short covering in the Bank Nifty. On the downside, 43,600 is a strong support where multiple bottoms has been formed. So I think according to us, 43,600 should be the stop loss in Bank Nifty, and we can expect that once the Nifty breaks out above 19,500, Bank Nifty could also take out the resistance of 45,000. So this is the conditional levels for the Bank Nifty. Still, the direction is not confirmed yet, but we will wait for the breakout, and breakout point would be 45,000 on the upside, and breakdown point would be 43,600 in the downside. Now let us look at the small cap index. Now here we can see that this is a breakout. So this is a 2022 top, the previous all-time high. The Nifty small cap index hit an all-time high in 2022, and it was 12,047 to be precise, and this 12,047 is taken out recently, and Nifty small cap index registers a new all-time high by showing a breakout. So whatever was the resistance previously now can act as a support. So currently small cap index for NSE is placed at 12,400 level, and the previous top support is there around 12,000. So keeping this level as a support, we can continue to believe that this rally will continue to be on the upside. So no doubt from the lower level, from March 2023 bottom, Nifty small cap index has registered a rally of more than 42%. So significant rally we have seen in the small cap indices, and still they are looking strong on the chart. They have just registered a new all-time high, and it is into continuation of an uptrend. So 12,000 is a very strong support for small cap index. Current levels are 12,400. Now look at Nifty mid cap index. Now this is a weekly chart of Nifty mid cap index, and as we can see over here, Nifty mid cap 100 index has gone through the roof. So this has been the 23 weeks, and out of this 23 weeks we have seen only one red candle. So only for 1 week Nifty mid cap index was in red, and 22 weeks were positive on week. So very sharp and steep recovery we have seen in the mid cap index, and they are trading at all-time high. So breadth of the market is very strong, though Nifty and Bank Nifty are not performing, but mid cap small caps are performing very well, and there are a lot of trading and investment opportunities we have seen in recently. So the broader market is very strong for the Indian markets. Now this is a small cap index against the Nifty. So this is a ratio chart which compares the performance of the small cap against the Nifty. So if this chart is rising, that means small cap is outperforming the Nifty, and this is the 2021 peak. Still we have not reached there, so there could be a chances that we may see outperformance of small cap will be there in the coming times also, and we may see this 2021 peak of the ratio chart reaching. So we are expecting this small cap outperformance to continue on the upside, and it could even extend the outperformance from here also. So this also suggests that this outperformance may continue from the small cap and mid cap. Now let us look at Nifty 500 index. So interesting thing is that Nifty 500 index along with the Nifty and Bank Nifty was not performing, but as it is a broader market index which includes 500 stocks from the NSE heavy weighted 500 stocks. So we have seen this week is a consolidation breakout. So for last 7 weeks, NSE 500 index was actually consolidating, and this is a breakout we have seen here. So this is a good sign. So it might happen that from the very small and very mid cap stocks, the focus would shift to a bit larger stocks, NSE 500 kind of category or sector. We can expect it to outperform. So this is a good sign for NSE 500 stocks, which has broken out from last 7 weeks consolidation. Now, again, this is one evidence which shows that overall market is doing good. This is nothing but the NSE 500 weekly chart, and beneath we can see that this is a number of percentage of stocks which are trading above their 200 days moving average. So this has reached to the 87%. So more than 87% of the NSE 500 stocks are trading above their 200 days moving average, which is a very good sign. And this is not the highest number. In 2021 and 2020, when post COVID we saw that significant rally was there. At that time this number reached to the 96-97%. So still it is though it has reached the overbought level, but still it is not at the highest level. It could even go above 90, even 95 or 95-97% was the number in 2021. So this number is continuously rising, which is showing that market breadth is quite strong in NSE 500. Now let us look at the world market setup. So we have taken a MSCI World Index weekly chart and MSCI ACWI Index weekly chart. So this MSCI ACWI Index combines the weight of emerging market as well as the developed market, and MSCI World Index is totally indexed from the developed market like US and Europe. So what has happened is in May 2023 we saw a breakout in this indices and it went up significantly, and after that we saw a retracement. So in 3 weeks it retraced a nice and reached to the previous breakout levels, and again here in last couple of weeks we have seen this trend is resuming uptrend. So in both the indices the uptrend is resuming, which is a good sign. So as far as global market technical setup is concerned, they are giving support to the Indian market indices, and we may do well from coming times. So let us conclude this. Now Nifty and Bank Nifty have been into a choppy trend as we have discussed, but signs are there which could bring back the bullish momentum in the benchmark indices like Nifty and Bank Nifty. So in the coming weeks we may see some action in the Nifty if 19,500 is taken out. Breakout is Nifty seen at 19,500, and support is there in 19,250 to 19,300. Par support for the Nifty is in the zone of 19,050 to 19,100. Above 19,500, Nifty could march towards the new all-time highs and beyond. Bank Nifty breakout is above 45,000 and support for the Bank Nifty is at 43,600. Nifty small cap and mid cap indices registers a new all-time high and have gone through the roof as we have discussed. Breadth of the market is very strong as more than 87% of the stocks are trading above the 200 days moving average in NSE 500. NSE 500 index has broken out from the last 7 weeks narrow consolidation, which is a good sign for overall market. Most of the sectoral indices like public sector enterprise, auto, metals, energy, IT, realty and infra are placed very strong technically on their positional charts. Few heavy weighted stocks like Reliance Industries, HDFC Bank, HUL, ITC and Kotak Bank are dragging the Nifty's performance. So friends, we have been talking about the underperformance of the Nifty, and Nifty has been underperforming just because of the major FMCG stocks. The stocks like Reliance, HDFC, Kotak Bank and ITC have not been performing, and that is why because of these few stocks underperformance, Nifty has not been able to surpass the resistance and not been able to show some momentum. So if something happens positively in some of the few of these stocks like Reliance, HDFC Bank or HUL, we may see some short covering in Nifty as well. So we are waiting for that. As of now it has not happened, but above 90,500 we can expect. World markets have resumed their uptrend after running correction. We expect stock specific bullish action to continue, and above 19,500 Nifty could register a short covering rally which could pull the index towards the new all-time high. Trading longs should be protected with 19,250 stop loss in the Nifty. So here I would like to add something like Nifty small cap index has gone up more than 42% from the bottom, and Nifty mid cap index has already risen for last 22 weeks. So no doubt the current trend is positive for the broader markets and everything is going fine for the market and we are into continuation. But we at this point of time, after seeing such a steep rally, being cautious is also advisable. So if something goes wrong and overnight something happens and support breaks, then we have to apply our risk management strategies in the trading stocks. So it is advisable to all of you that you whatever you trade from this level, you keep a tight stop loss and apply a proper risk management strategy in your overall portfolio. So that is what I wanted to share. Now over to you, Ajit. Ajit will discuss the derivative markets.
Yeah, thank you, Vinay, for the insightful information about the market. So now let us dive into the market from a open interest point of view. I hope my screens are visible. So
It is
uh,
visible.
yeah, now if you look into the market from a open interest perspective, we have seen short covering in the Nifty, where open interest has fallen by 4%, with the bank Nifty rising by 0.5%. And similarly, short covering has seen massive short covering is seen in the Bank Nifty, where we have seen 7% fall in the open interest, while Bank Nifty rising by 0.7%. And short covering near to the support level is very important. It shows that the smart money is coming into the market. It's a very important uh, factor which has happened on the Friday. If we look at from the calls and put perspective, we have seen that 19,300 and 19,200, we have seen huge open interest in the put side, and similarly 19,600 and 19,700, we have seen call writing. So with this information, what we can do is, like, we can plan for the entire week, and we can think like this, that market, if it corrects, 19,300 and 200 is going to be a crucial support going forward, and 19,600 and 19,700 will act as a crucial resistance. So we can take some of the profit near those important levels and add positions near to the support level. This will help from a trading perspective. This is very important chart. What we can derive from this chart, this blue color line, yeah, this blue color line is a put line, and this red color line is a call line. This is a open interest line. So from this kind of analysis, what we can derive on August 31st and September, when market rallied, we see there is a huge open interest built up in the put side, and major of the position comes in put writing, not in buying. So here there is put writing when the market was going up, and on the same hand, there was call unwinding. So what this information suggests? This information suggests that the smart money is writing put, and they are unwinding the call position on the higher side. When this such kind of phenomena occurs, there is high probability. I am using the word high probability because anything is possible in the market. There is high probability that market could surpass the resistance. So this is a very insightful information. And if you look at from the open interest build-up point of view, similarly we can see 19,300 has a highest open interest, and 19,600 is the highest call open interest. 19,300 was a put open interest. So this data is also suggesting that 19,300 is going to be a crucial support going forward, and 19,600. If we compare both the open interest data, we can see the open interest is not that built up when compared to open interest of put. So here the people are not ready to write the put in that quantity when we compare call when we compare to that of put. They are confident about the support level, and but they are not confident about the resistance level. This makes resistance little weaker. So going forward, there is high probability that 19,600 we can take it off. And if we look at the change, there was highest change in the 19,300 put, means lot of addition has happened in 19,300 put side. And if we combine the FIS figure, they have also done the short covering. They have about 99 crore with open interest going down by 4,689 contract. And on the for the benefit, they have also taken long position. They have created long position in the future segment. So this gives us a little more confidence that there is high chances that market can go up in coming week. So what is the outlook for the market? If we combine and sum it up our observation, that short covering in the Nifty, put writing at 19,300 and 19,200 level, short covering by FIS in the index segment, long build up by FIS in the stock future segment. This indicates that we can create a long position with a stop loss of 19,300 for the upper level of 19,600. Similarly, in a Bank Nifty, we can accumulate Bank Nifty with a stop loss of 43,500. Again, this level has open lot of put open interest, so this gives us an evidence that that level market can take support, and on the higher side 45,000 to 45,500 will act as a resistance where we can test easy. Thank you. And no, one more slide. Sectoral open interest. where we can see the telecom, power, metals, cement. Similarly, on the Vinay has also mentioned technically and from the derivative perspective, these sectors are looking good. So we can select some of the few stocks, best stocks from this sector which are performing. Yes, thank you everyone.
Okay, thank you, Vinay. Thank you, Ajit. So now let me try to conclude. The conclusion is this, that we had last time showed you that remain cautious. Now it is time to remain stock specific. As usual, follow the research recommendations. Prefer large caps. There is a possibility that large cap may rebound compared to mid cap and small cap. Reduce overall beta into your portfolio or into your trading position. What may happen is that if there is an event and if we are negatively surprised, this 19,300 and 19,250 is a very crucial support. If that support is held, we are okay. We will go, and if we break 19,500, we are headed towards 20,000. That is clear. If for any reason, if we were to break 19,250, then mid cap and small cap may fall much more than the large cap. So reduce the exposure toward mid cap and small cap, increase the exposure towards the large cap, and try to reduce the overall beta of your portfolio. Overall volatility of the portfolio should be brought down. For a longer term investors, 10 to 15% cash should be created as we go towards 19,500 to 2,000 level, 20,000 level. Earlier we were playing test. Recently we have moved to one day kind of a market. Now we are entering the T20 phase of the market. It will be either you will hit sixes, you will hit fours. If you happen to pick the right stock, if you happen to pick the right research recommendation, there will be stop losses also, and you will get out in some of the positions. So try to reduce the overall position you take per recommendation. Try to conserve capital because we are entering a very high momentum phase. So from May, we have been aggressively pushing the BSPL, BNPL, MTF, E-margin, whatever name you were to tell them. 92 recommendations, 92 recommendations have more or less been exited or book profit. Humongous profits have been generated, and we have been getting a lot of success stories from our branches. If you are a customer, or if you are a branch manager, if you are a relationship manager, and if you have traded on these e-margin recommendations, and if you or your clients have made money, I would encourage you to share those success stories with others. If you share those success stories, that will increase the perception about the research. It will improve the visibility, and that visibility will help everybody. So a good amount of effort has gone into identifying those ideas. Many of them have done fantastically well. This has helped us increase our book size also. We are looking to increase our book even higher, and I would request all of you to share whatever success stories you have. The client had given his portfolio for MTF, no capital. You have basically put a hold on those stocks, use the little bit of cash for the mark to market, and traded on these stocks, and on capital or on that portfolio of say 10 lakhs, you have generated profit of 1 lakh, profit of 2 lakhs. Share those success stories with the research team. That will help, and also the other colleagues in the company. That will improve the visibility about the research. 3 calls: EIH, Equitas Small Finance Bank in India Glycol, profit was booked. After that, I think Paytm was also exited yesterday. Fundamental side, 94 recommendations have been issued where profits have been booked. Apart from 1 or 2 where there was a stop loss, I think all of them, all 94 of them are more or less positive, where we have generated anywhere between 9 to 20 kind of percentage return over the last couple of months. Last week also, India Bull Housing, Care Rating, KPR Mill, Mastec, Cyient, GPIL, FIM India. Another 7 recommendations have hit the targets. First target in stocks like Care to final target in stocks like FIM. Another 6 new recommendations have been issued in Fusion, Eastern DM, Link, Datamatics, MRPL, HBL Power. I covered these 3 or 4 stocks in the midweek market outlook, where we have come out with the individual slides on each of these stocks. Another 6 MTF or E-margin BSPL recommendations have been issued. Motherson Sumi and Sumi and Hypel were issued yesterday. Before that, Deepak Fertilizer were issued and Navin Fluorine were issued. Equitas has hit the first target in just 2 sessions after we issued the recommendation. So these are the ones which we have also issued, and targets of Equitas first target was achieved. Apart from that, for long-term investors, we have issued this 18 stocks as a SIP. Those who want to invest over a long period, gradually accumulate these stocks. So that's what we wanted to cover. Overall, be a little cautious, but there are possibilities, there are opportunities which we are trying to bring to you. Okay, now we can open the forum for question and answers. If you have any questions, you can share it with us on your, depending upon the instrument you are using, you can see a question mark symbol. Click on the question mark and put your question. We'll try to answer as many as possible. Okay, Tanmay Patel is asking about Nifty Metal Index. Vinay, what is the outlook for metals?
Yeah, so metal index has actually broken out, and kind of inverted head and shoulder pattern is there on the Nifty metal index. So outlook is positive. Technically, we have seen a fresh breakout, and it is heading towards its all-time high. So the previous all-time high was 6920, and recent high was 6867. So it is on the verge of taking out that resistance. So technically, all the metal stocks have actually closed on a very strong wicket, and especially the stock like Tata Steel, NMDC, SAIL, and JSW Steel closed on a very strong wicket. So outlook is positive. Fresh breakout is there, and they could do well in coming times.
Okay. Now, kindly share the success report for ETF. Okay. Anupam Suryavanshi is asking about. So the month is just got over. We will issue a PDF with all the success which we have achieved in recent past, and we will share it with you. Amit Mudia is asking, IT stocks are doing well. What is the upside potential in IT stocks? Vinay?
Yeah. So Nifty IT index has also closed on a very strong wicket. It is on the verge of making 52-week high. The previous 52-week high was 31,660, and it has reached almost there. So closing of this week is quite strong for the IT index. We might see some good sharp short covering in the IT stocks. So till now we have seen that Infosys and TCS have actually underperformed the overall benchmark indices, but the way this week they have closed, I think there could be a short covering in the IT index. So IT index is also looking strong at this point of time, and they could also extend rally from this level. So yes, I am optimistic about the Nifty IT index in coming times.
Okay, so there are some specific suggestions. One is to share the PDF. Other is, so we if there is an opportunity, we will issue MTF recommendation before the market or after the market. But mostly the MTF recommendations are the momentum technical trading ideas. So whenever there is a breakout happens, we issue a MTF recommendation. That's why it is difficult to come out with a recommendation before the market or after the market. But we will take this suggestion and we will try to issue some MTF call before or after the markets. Call flow. So there are different kind of customers we have. Rajan Lakshmi is asking that she would like to have more option calls. We will try to issue more calls, but there is a limited amount of calls which we issue, because there are other relationship managers or the senior management who thinks that the number of calls are much higher and we should reduce. So we try to balance, but we will take this suggestion. One more question is, what are the key sectors to focus for a month or two? So for next 2 months, I think if you are an investor, chemical and pharmaceutical stocks are showing the sign of bottoming out. That's where we can focus. From a trading perspective, Bank Nifty is more volatile and Bank Nifty can outperform the Nifty if there is a breakout beyond Nifty, the 19,500. So that's where we can see some kind of outperformance if there is a breakout. From sectoral perspective, Ajit, you showed a slide. What sectors are showing signs of an open interest buildup?
Yes, sir. So the sectors were power, metals, cement, and technologies. These sectors have huge open interest built up in the last week.
Okay. E-margin stock list. E-margin stock list is available on our website. That on the first page of our website, it is available. You can share, look at that page and see all kind of whether what kind of stocks are available on the for the intraday, what kind of stocks are available on the for the e-margin. That information is easily available. You can connect with our customers care service. They will help you find that list. It is shared easily with our relationship manager also. So Dr. Shriram, if you have an access to a relationship manager, they can also provide you that. Ritu Sharma is asking about rationale. So for every MTF recommendation, there is not only just a recommendation, there is a rationale given at the end of the page. So there is a chart on the PDF. Below that, there are 3-4 line rationale is given. So Ritu Sharma, you can open the PDF and they do give a lot of rationale why we are recommending this stock. What is the rationale for giving this recommendation? Bhavik Sutta is asking any reason why Nifty underperformance vis-a-vis mid cap and small cap. So first we had a result season. In result season, usually the people would like to see what kind of Nifty earnings growth is going to be there. So result season is more or less in line with the expectation. Second thing is that Nifty large cap stocks, if say one or two stocks like Reliance or a Kotak Bank or any heavyweight banks like HDFC, if they were to underperform, the index would underperform because they have a large weight like 15%, 20% into index. And if these couple of 3-4 stocks do not perform, the index will not perform. Compared to that, in mid cap and small cap indices, we have seen that the majority of these stocks have been performing. That's why they are going up. But it is a sign of a caution. It is Nifty is the dog and small cap and mid cap are the tail. Right now, tail is wagging the dog. But if dog doesn't perform, if Nifty doesn't break out of the 19,500, then we will be into problems. Logesh EV is asking how to avail the e-margin facility. So when you buy a stock and when you enter a transaction, if that stock is available in the e-margin, there is a nudge there. You can click on the e-margin and you can avail the facility, sign the agreement online, or you can get in touch with our relationship manager or any branch which is close by to you. Connect them. There, the relationship manager will help you put those trades. Okay, so success ratio, everybody is asking. Yes, we will share a PDF. Our MIS team will share. I'll ask product team to share the MTF and fundamental recommendations. Individual stock specific question we will not be able to answer. A lot of people are complimenting us for the success. I acknowledge and I'll thank it from the whole team that we are thankful for the following the researchers, and I would also encourage you to share this feedback with others. That brings us to the end of this webinar. Thank you all for joining. Thank you, Vinay. Thank you, Ajit, for participating. We had a good participation today, and I hope the information which we have provided is useful to all of you. We'll see you over the midweek webinar in the week. Thank you and have a good weekend ahead. We'll close the webinar. Thank you.
Thank you.